Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 27th of March 2021, and we're publishing our gold and silver weekly update for the week ending the 26th of March. We also briefly look at political events and economic reports which could shape what happens to the US dollar, long-term interest rate yields, and therefore precious metal prices. So let's take a look. Gold fell $12 last week from $1,745 to $1,733, having hit a high of $1,745, in other words, not rising above its opening level, or at least its Friday's closing level, and a low of $1,722, a fall of 0.7%. In sterling terms, gold finished the week at £1,257, that's down £2, or 0.2%, and in euros it closed at €1,469, that's up €3, or up 0.2%. Silver, though, fell $1.19, from $26.27 to $25.08, having hit a high of $26.27 and a low of $24.47, a fall of 4.5%, and a lower high and a lower low compared with the previous week, which is interesting to note. In sterling terms, silver closed at £18.28, that's down 70 pence, and in euros it closed at €21.27, that's down €0.78, or 3/4 of a euro. The gold to silver ratio rose from 66.4 to 1 to 69 to 1. Bitcoin fell last week by almost $5,500, and its price currently is $54,303. Still some 3 times higher than it was about 4 months ago. The Dow Jones closed on Friday at 33,072, up 453 points on the day and up 445 points on the week. The S&P 500 closed at 3,947, up 65 points on the day and up 34 points on the week, and the Nasdaq Composite closed at 13,138, up 161 points on the day, but down 77 points on the week. Moving to oils, Brent crude closed at $64.57, that's just up 4 cents for the week, and WTI crude closed at $60.97, and that's just 45 cents difference for the week. The dollar index stands at 92.76, and that's up 0.85 on the week. Notice the increasing dollar strength. Now, our price trading range last week stated, quote, "Our usual targets for gold and silver more recently are holding well, and we see no reason why gold should not move comfortably within the 1650 to 1800 range, with 1600 and 1850 being outliers, and silver operating between 25 and 27, with $24 to 28 as outliers." Well, gold opened down last Monday, and throughout the week gyrated frequently, attempting and failing recoveries. Though, to put it into perspective, the difference between its high and low for the week was just $21, which frankly is tiny. Economic news last week in the United States was mixed, which we shall discuss shortly, and frankly gold's price was all said and done influenced by the strengthening value of the dollar in the end. What we were impressed with for sure was how well it has actually held up against a final near 1 point dollar index rise. It will come as no surprise that with gold being paired or valued in dollar terms, the two main factors affecting its price is, of course, supply and demand, both physical and paper, and the value of the dollar itself, or change in value. We saw some whipsawing in price during the week simply because of the lowering of long-term US yields as a result of a major fall in consumer spending for February, showing a minus 1% compared with a plus 3.4% in January. From a technical point of view, we have two main resistance points. The 10-day moving average at $1,734, which is where gold is hovering near, and the 50-day moving average at $1,785. Of course, we then have the psychological barrier of $1,800 lying above that. Support is seen ultimately at the June 2020 lows of $1,670, with a number of technical, though not necessarily strong support levels below current price down to the $1,670 level, though again, like $1,800 being a psychologically important resistance level, $1,700 is a psychologically important support level. Short-term momentum has turned negative, while the medium-term momentum remains positive, and the MACD is actually pointing to higher prices ahead. Silver, like gold, fell on opening on Monday, but unlike gold, really failed to stage any sort of recovery, except perhaps maybe a jump from its week's low on Thursday. Again, to put this into perspective, the trading range between high and low was $1.80, much more percentage-wise than gold by far, but we've seen moves far greater than this in just one day in the not-too-distant past. We watched silver quite closely on Friday to see really where it was going to close, as it hovered both above and below and vacillated the psychologically important $25 level. There are currently two schools of thought. The bearish school is that the dollar is likely to continue to strengthen, at least for a short while, thereby dampening silver prices down further. The second, more bullish school of thought is that once the stimulus package or packages have been fully delivered and expedited, i.e. spent, consumer spending will rise, and as businesses step out of economic purdah and countries begin to open up again, we should see the industrial demand for silver rise quite significantly, together with its price. Now, technically, whilst medium to long term we remain bullish for silver, from a short-term trader's perspective, we would suggest caution. Technical analysis suggests we're either going to see silver gravitate towards the 50-day EMA at or near $26, or fall back towards the 200-day EMA at or around $24. Now, US economic news published last week, as referred to earlier, was mixed. For example, existing home sales for February were down 440,000 compared with January, and new home sales were down 173,000 for the same period. The current account deficit was minus 188 billion for quarter 4, compared with minus 181 billion. Durable goods orders for February were minus 1.1%, compared with January's plus 3.5%. Personal income was down. It was a minus 7.1% for February, compared with plus 10.1% in January. And consumer spending for February was minus 1%, compared with plus 3.4% in January. Now, on the positive side, preliminary market manufacturing PMI for March was 59, compared with 58.6 in February, and the preliminary market services PMI was 60, compared with 59.8 for the same period. Not a huge uptick, admittedly, but positive. Initial and continuing jobless claims were lower this past week, and core inflation for February was 0.1%, compared with 0.2% in January. Of course, the Fed might not like that. Finally, the Consumer Sentiment Index for March was 89.1, compared with just 83 in February. Now, taking a look at what we're expecting this coming week, well, for Monday, nothing's scheduled. So other factors will determine what will happen to prices for gold and silver. On Tuesday, we have the Consumer Confidence Index for March. Wednesday, the ADP Employment Report for March and Pending Home Sales Index for February. And on Thursday, we have the weekly Jobless Claims Report, as always, the final Market Manufacturing PMI for March, the ISM manufacturing index for March, construction spending for February, and motor vehicle sales for March. And then on Friday, perhaps the most important day, the non-farm payrolls for March, together with the unemployment rate and average hourly earnings. So Wednesday through Friday are certainly noteworthy, with particular attention to be given to the employment data. We suspect and anticipate these figures to be a little more positive pro rata than they were last month. Now, politically, there have been some headlines, but they've tended to be more party political than economic revelations, though we have been given a hint concerning China, which we shall produce another separate video for. So where does this leave us for gold and silver prices next week? Well, as this past week, the price of gold and silver will continue to be determined by yields, interest rate yields on particularly longer-term treasuries, and dollar strength or weakness, and any uptick, when it does occur, in the industrial demand for silver, though we're not expecting such a major industrial demand uplift next week. Our usual targets for gold and silver being lowered slightly, at least for silver. With gold still trading, we estimate between $1,650 and $1,800, with $1,600 and $1,850 as outliers, and silver trading between $24.50 this time and $26.50, with $23.50 and $27.50 as outliers. Tomorrow we shall be publishing episode 16 of Bitcoin vs. Gold and Silver, as we failed to produce one in the series last week, though frankly not an enormous amount of news was available. And if we manage to get time, a video on what's going on with China. So please do not miss those. Meanwhile, do share with us what you think. Thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And later today, we will be publishing a video on the Richard and Greg channel, where we're talking about Meghan Markle and Harry and a few other issues not to be missed. But that will be published in a few hours later than this video is being published. Finally, we wish you a safe, enjoyable weekend, and as always, a prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.